BP shares are a mainstay of UK pension funds, largely on account of their reliable and sizable dividend. Well, not only has the stock plunged, but now the dividend itself could be in danger. So here to discuss the potential effect of that is David Paterson, Head of Corporate Governance at the National Association of Pension Funds. Mr. Paterson, welcome. Thanks for coming in to talk to us about this today. There's a perception out there amongst many of us who hold pension funds that stocks like BP, those kind of blue chip stocks, are exactly the kind of stocks that make up pension funds. Is that true?
I think it is true, but one must remember that pension funds are very well diversified. BP, for example, is probably about 1.5% of a typical large pension fund's assets. And funds are also well diversified internationally, so UK equities account for perhaps 30%, foreign equities perhaps account for about the same. So there's a very widespread investments held by pension funds. So
should people who've got pension funds be looking at the plunging BP share price and feeling concerned about the stability of that fund in their own future?
And I think people are concerned, obviously. But as far as the fund itself as a whole is concerned, the damage is on the margin. It's not fundamental. It does raise questions, of course, about how the fund is managed and the view which the fund managers are taking of shares like BP as part of their investment portfolio.
And what about the share itself? I mean, there are now concerns, aren't there, longer term, indeed, whether or not BP will stay in its current form. I mean, that must be a worry. And with the share price this low, a concern about selling it right now as well.
Yeah. Well, I mean, I'm a governance specialist, so my interest really is in how the board is reacting to these challenges and how they propose to, if you like, stabilise the business and put it back onto a growth path.
And how do you think they've done so far?
Well, I think that the results are very mixed, but we really don't know because we're in the middle of the crisis. The only good news we can see is that at some point they will cap the oil well. Beyond that, we don't know what the impact of regulation or litigation will be on the long-term prospects for the business.
So you'll be looking very closely, presumably, at what President Obama does and indeed the future of deepwater drilling, not just for BP, but presumably for other companies in the oil and gas sector.
I think it clearly has wider implications. We'll have to see what the US government proposes and how the industry responds.
Now, in general, in terms of pension funds, I think anyone who holds a pension likes to think, obviously, that the pension funds are doing very well, but there's generally a feeling that they invest conservatively. Is that correct?
I think it is correct for the vast majority of managed pension funds which are overseen by either a group of trustees or the large insurance companies in the UK. Typically, a fund will have about half of its assets in equities spread internationally and probably another 40% in gilts or corporate bonds. So there's 10% of that money which is probably invested in things like hedge funds or private equity or some of the more interesting alternatives, if you like. So it's a relatively small part, and we're worried here about our major companies, not about the alternatives which have been in the press so much over the past couple of years.
Indeed. I was just going to come on to that because obviously these have been very difficult economic times, and for pension funds they need to, over the long term, be providing a return. How did you cope, and how are you coping indeed with the credit crunch and the sovereign debt crisis?
Well, I mean, we speak for the large pension schemes in the UK, and because of diversification, they've coped reasonably well, but quite clearly values have fallen and pension fund deficits have risen. We all know that. So there is a real job to be done to recoup the damage done not just of the past couple of years, but really of the past 10 years to the long-term growth in pension fund assets to meet their long-term liabilities.
You've talked quite a lot about diversification today. Are most pension funds very different in makeup from the way they were 10, 15 years ago?
I think what's happened is that because of the pressure from regulation, the proportion in equities has declined and proportion in bonds has increased. So they've become less risky than they were. And that's been the biggest single feature. Longer term, there has been a move away from UK into international equities and bonds, which I think is a good thing because that, again, diversifies the risk and, frankly, the rewards around the portfolios.
So just before we go, if you've got a pension at the moment, a UK pension, you shouldn't be too concerned about watching what happens with BP?
You shouldn't be too concerned, but watch this space closely.
OK, lovely. Thank you very much indeed for that.
Thank you.